Good evening, everyone. I welcome you all to the Meet and Chat Profession with the Professionals April edition. The Meet and Chat with the Professionals is a monthly online section of the Finance Business Partners Community Group, which is one of the mediums we use in keeping our community members abreast with industry knowledge and also as part of our contribution in changing the narrative of the profession. So my name is Balogun Seun Ayodeji. I'll be anchoring today's section. So it's my pleasure and heart filled with excitement to have here with us, in person of our guest, Mr. Balogun Kudus Adibowale. So he will be speaking with us on practical accounting explained from bookkeeping to financial reporting. So just as we know, the power of knowledge by application cannot be overemphasized. Julian Hall once said, knowledge is useless without consistent application. So okay, let's take for instance, we all have many young and smart chartered accountants now than ever, but many of us find it difficult to deliver when it matters the most. So the truth is, you cannot fully blame them. It's simple because they don't have a practical understanding of how accounting works and how they can apply all these principles and higher standards in their work environment. So without wasting much of our time, permit me to introduce our wonderful guest to us today. Mr. Kudus is an experienced accounting and finance professional with over 10 years experience cutting across several industries in Nigeria, where he has worked in various capacities. So I know say 10 years, no be being sure. So he started his accounting career as an audit trainee in one of the medium-sized audit firms in Nigeria, and presently is the finance manager for ULS in Education Nigeria. So I think we can see the growth. So, but you have to be carried away because behind those growths, there's a lot of work that has been done behind the scene. So I trust Mr. Kudus is going to be chipping in those behind the scene work for us so that we can all learn one or two things from his professional journey. So finally, if you are very active on the street of LinkedIn, you should have come across Mr. Kudus' timeout section, which probably calls timeout with Iweabi, where he takes the time to share career talks and for finance and non-finance professionals on how they can navigate their career challenges and also prepare them for the journey ahead. So I'll hand over the platform to Mr. Kudus to take charge of the section for today. But before then, in the course of the section, if you have any questions, please let's endeavor to use the chat box. And as we join the meeting or rejoin the meeting at any point in time, it's important we mute our mic so as to avoid any further distractions in class. So, Mr. Kudus, good evening. So, over to you, sir.
Yeah, good evening, Seun. Thank you very much for the invite. Thanks. You guys are doing a very, very wonderful job. I would just like to confirm that I'm audible enough, right?
Yes, from my end, I think that's good.
Okay, I would like if someone else can also confirm that I'm audible.
I can hear you loud and clear, sir.
Oh, thank you very much. Yeah.
Yes,
so
sir.
not wasting much of our time, we'll just get to it, and then I would like to correct something. I think that's an oversight. I'm still a very young guy, and I'm just in my 7th year. I'm not yet 10th. Though I've been working as far back as when I was in secondary school, but then those ones didn't count as my finance and accounting experience. However, as per finance and accounting, I currently have my 7th year of practice. Like you said, I started my career journey in a small size audit firm, and how did this help me? I'll just brief us a little bit, and then we get to the matter of the day. Right? For some of us who are just starting out in our career, I think it is very necessary that we also recognize wherever we are at this particular point in time in our career as we are starting out. Wherever organizations we are working in, wherever the standard is over there, let's as much as possible don't despair. Let's as much as possible prioritize learning, because when I started my career, I started with me and my boss. It was a small size audit firm, a very, very small size audit firm. where I worked directly with the managing partner of the organization. During this period, I only had a national diploma in accounting, and all this while we were doing the job, it's always me, the boss sending me here and there, go to the tax office, go and meet this client, go and meet that client, and it was always as if these things are very, very hectic. Yes, they were, but then they form part of some of the things that actually laid the foundation for my growth. And so far, and I think one of the reasons why I'm called here today to give this talk or to take us through this class. I love doing class than having talk. To take us through this class is because of my years of experience. So far, I think I've worked in not less than let's count 1, 2, 3. I've worked not less than 10 organizations, and I've worked as an audit trainee. I've worked as junior accountant. I've worked as an internal auditor. I've worked as an operation and financial analyst. I've worked as an account officer, work as a CFO to a startup, and currently I work as a finance manager at one of the leading edutech company in Nigeria and West Africa or Africa at large. Yeah, so I'll be taking us through what we want to discuss today. And permit me, I don't really have a slide for this session. So, because I want it to be as participatory as possible, I will be asking a lot of questions. This is a very interactive class. Enough of we having theory. You probably will not be jotting in this class that much. However, your jotting will span around you having to jot probably to answer some of the questions that I'll be throwing to the group, and let's share thoughts and ideas together. This is not me teaching us, but this is me facilitating a session to actually tell us that those things that we don't think we know, we actually know more than we think we know. If anybody has seen my LinkedIn post today around a story between Oleyo and Iwilabi, such that Oleyo works in a firm, a startup firm, where they offer a service, a similar service as Netflix, a streaming, live streaming video service, right? As Netflix. And then he is so concerned, he's having an interview coming forward, right? And for the interview, what is expected while he was filling the application form, I think this is becoming more and more common. This is because, though what I'm saying is not like real, it's something I found, but then it's as a result of my experience so far. It's becoming more common that whenever you are filling some job applications, they'll be asking you to tell them your experience doing one thing. Most especially telling them your experience of applying IAS or IFRS standards, right? So Oleo was asked to tell them in this particular scenario a situation where he has applied any of the IAS or IFRS standard, and the guy is so bothered that he has never applied any before. He has never applied any before. The guy is so bothered that he hasn't ever applied any before. But when he saw Iwilabi, he told Iwilabi that he has never applied any before. And someone like me, it's just so funny that regardless of how well you think you don't know, I can still bring it out to you or point to you that you actually know something that you don't know that you know, right? And this is where, sorry, please give me a second. Please, can I just get a moment to quickly change my location, please? Is that fine? Apologies, I'm in transit and I just need to change my location. Is that fine, please?
Right.
Okay, thank you.
That I was not a member of.
Yeah, so I think I'm back. So can we hear me? So can we hear me?
Yes, we can hear you, sir.
Okay,
Yes, I
great.
can hear you.
So as I was saying, right, and what was asked was that tell us a scenario where you have applied any of the IAS or IFRS standards. And this guy is so bothered that he has never applied any before in practice, though he knew them. Perhaps he knew the theory, but he felt like he has never applied any. And that's the reason. Can you mute your mic, Stephen? And that's why I came in to say that, okay, guy, where you work, what do you currently do? How do you recognize your skills? Right? And then he told me that, okay, for their sales, they have monthly plans, right? Annual plans and quarterly plans because they offer live training video services, right? And he said, if at the beginning of January 1st, 2022, for example, someone subscribed to a monthly plan, right? What he does is just to do what? Who can tell me what you normally do if someone subscribes to a monthly plan for a service that spans 1 month? What do you do? How do you recognize your revenue? Yeah, the class has started. So yeah, let's get to it. Please go ahead. You want to try. Let's make this thing interactive because that's how we move really, really fast. Someone subscribes to your plan and it's a monthly plan and pays, let's say, 5,000 naira. That's the amount for the plan. In your company, you currently have subscription plan for 1 month, quarterly, and then annual plan. 1 month is 5,000 naira, quarterly is 10,000 naira, and then the annual plan is 35,000 naira. And now someone is subscribing on the 1st of January, subscribing to your service. So how do you recognize this revenue? So how do you recognize this revenue? Who is helping us out? We have professionals in the building. Let's help out. Let's feel free. This is the learning platform. So as much as possible, let's learn. Let's have you tell us what you know, and then if it is right, we give you the kudos. If it is not, we try as much as possible to give you a nudge or to nudge you to ensure that you get it right. What of that? Feel free. Don't be shy. Let's feel free so that we can move fast. Yeah, it pays. It pays. The person pays immediately. So let's move on.
Hello, good evening, everyone.
Yeah, good evening.
Am I free to speak now? Over.
Yeah, please go ahead.
Okay, so when you want to recognize revenue, there is an accounting standard for that, IFRS 15. It prescribed a set of rules for you to recognize your revenue, and of course, the overarching thing is that revenue should be recognized when it is earned. Now, in the case where you have a subscription based model, when in this kind of scenario, for instance, the revenue is something that's going to be recognized as the performance obligation is satisfied. That means as the this is like a kind of revenue that is over time. So you recognize it over the period of 1 month for which the customer has paid for. So that means if it is an automated kind of system, there's a way that thing can actually break the revenue down into the monthly earnings that has been earned by the company, or you recognize it at the end of the month as revenue earned. But if it pays on the 1st of January and your system is not that automated, that means what you do is, as at the 1st of January, the whole amount for the month of January has not been earned. The whole amount will be earned by the end of January. So that creates your accounting entry of you're debiting your bank that you receive money in or cash, and then you are crediting a contract liability or deferred revenue for that period. So if it is an automated system, that liability section is going to be amortized over that period of 1 month that the money was paid for. Thank you. If anybody wants to add to that, please.
Okay, so I think I would like to have the accounting entries itself. I would like to have the accounting entry. Let's say you are reporting at the end of the month. What would be the accounting entry?
If it is at the end of the month, then you debit your bank, you credit your revenue.
Give us the amount. Let's play with figure. I've given us the
Yeah,
amount.
5,000 naira, of course, that's the amount.
Okay, 5,000 naira. Then we are working with dollars. Sorry, $5,000, and then your revenue, share, and then that's another credit revenue. Am I right?
Yes.
Makes sense. Okay. Okay. Thank you very much for this. I believe almost everybody gets what he has said, and we'll definitely work with this. So you see, this thing is the same thing that Oleyo has mentioned, that is what he do in the organization. But funny enough, he never knew that this thing that he has actually done is in line with IFRS 15. What did I say? Is in line with IFRS 15. This same thing goes to almost every one of us at some point or the other. Thereby, we are applying some accounting standards, but we never knew that we are actually applying those standards. And this is where we are going to start the class from. So that I don't just like, let's give the class a bit of structure so that we can be right on time. Right. So this is what we have. So this is what we want to look at. We want to look at financial reporting, what you need to know, understanding IAS 1 at a glance. You need to gain business understanding, transactions. What is your understanding versus the IFRS requirements? Identifying the relevant books of accounts, what to debit, what to credit, approval, source documents, schedules, and what have you, and then getting to preparing the financial statement itself. I will, as much as possible, be very, very brief in terms of this discussion so that we can take home something tangible, even if we have always known some of these things before now, right? So what we want to do is, like what Sadiq has said, we'll get back to it, but then, so let me just tell us what that means, right? I said something. The topic of today's course is what? Practical accounting. From bookkeeping to what? To financial reporting. This leads to another question, and I would like us to be very, very interactive in the course of this class. When I say interactive, let's make it very, very exchanging. Let's be swift. Once you know the answer, let's talk. In this class, we said, what is the essence of accounting? Why do we need to account for something? Anybody? Why do we need to account? Who wants to try? Why do we even need to prepare financial report in the first place? Let's go ahead. Let's tell us your name. Go ahead.
Good afternoon, sir. My name is Damola Okewole.
Okay, Damola, thank you. Please go ahead.
I think the reason why we prepare financial report or financial statement is for decision making.
One, for decision making. Thank you very much. For decision making. Is that
Yes.
all?
No, probably for decision making, number one. Number two, to have an accurate record of transactions that have been done in the past, accurate transaction, and then in some quarters we need to know how profitable a business venture is, or a business what is it called, like a business generally, how profitable it is. So I think among others, currently I think I can remember that for now.
Thank you very much, Damilola. Who else wants to give us it? I love the fact that you made mention of something for decision making. Let's note that for decision making, we are going to get there. Who wants to chip in something? Tell us your name and then go ahead to it. Let's be swift, please. We have a lot to deal with. Let's feel free. It's a free word. Learn. Usually one of the best ways to learn is to do. You act. So let's go ahead. Who's saying something?
Hello, good evening, sir.
Yeah, good evening. Please go ahead.
This story. So, one of the main purpose we also keep accounting record is also for comparison purpose.
For
In order for
comparison
us
purpose.
to make probably the past years and the current years to know if the organization is actually moving forward or we actually need to do some adjustments in one way or the other.
Thank you very, very much. Toy, thanks a lot. Thanks a lot. So, yeah, we are keeping some things, decision making, comparison. Who else is giving us something? This is
Okay. So, can I come in?
Please go ahead. Tell us your name and go in.
Okay, my name is Idris Abubakar Aliu. So I want to talk on the accountability aspect. So
Okay.
citing the business entity concept now that says that a business is actually different from its owner. So
Go ahead. That is it. Go ahead.
okay. So now, as a business owner, now you're actually acting as a custodian now on behalf of your business. So at the end of particular periods, you are supposed to render that accountability to actually know how far, what has been done for that particular period of time. Okay, now the fact that one even owns a business now doesn't actually mean that he or she can just do as he or she feels. That is where the business entity concept comes in. The business is actually a separate entity from its owner. The transactions of the business is different from the transactions of the owner itself. So at intervals, the need for accountability cannot be overemphasized. And that is where bookkeeping and financial reporting as a whole comes into play. Thank you.
Thanks a whole lot, Idris. Thanks so much. Thanks, Idris. Thanks, Tohi. Thanks, Daniela. Thanks a lot. So this is it. I love the points that we have given. We made mention of something, or Idris particularly made mention of something. Entity concept in accounting. I think that's the genesis of this whole accounting of a thing. And how do I mean that's the genesis? Imagine that you have money. Let's say Idris has $5 billion. He wants to invest in what? He wants to invest in artificial intelligence, business of the future. And then the first speaker, Damilola, is somebody that is so savvy in terms of tech. And then Toib is also very savvy when it comes to operational activities, right? So what happened is that Damilola just has the money, but he doesn't have the knowledge or technical know-how to carry on the business, to invest or to execute business in terms of the artificial intelligence that he has interest. What does he do? He takes money and do what? And transfer for him or to Damilola. And that's where whole concept of accounting comes from. That's where the work. This is what we are talking about. We are talking about bookkeeping here before we move to financial reporting. As much as possible as an accountant, the first thing that you need to take note of, once you assume a new job, once you get to any place, the first thing that you want to take note of is that what is the transaction? What is happening? And that's why we have IS1 there. Really, that defines how we present our financial statements. So the bedrock of any financial statement, any form of bookkeeping is called what? Events. An event. Or what? A transaction. That's the bedrock. Once there is no event, there is no reporting. Once there is no event or once there is no transaction, there is no bookkeeping. I repeat, the first thing in any form of what? Financial reporting, accounting, IFRS 30, is what? Event. Was there an event? If yes, then yes, that's when you sit upright and say, yeah, we need to dissect this thing. But was there no event? No. You don't do anything. There is no need for reporting. Are we following? So let's go back to what those first three speakers have said, and then I also remember what Sadiq said. We are going to get there. But then, once you are an accounting person or a finance professional or a business, you are into any form of business, right? Or you're an accounting student, no matter what, you will use IS1. I repeat, no matter what, you are going to use IS1. Why? Because IS1 is the one that gives the guideline on presentation of financial statements. In terms of the definition of terms, what a financial statement is, what should be inside the financial statement, and what not should be inside the financial statement. And that is why, as you are here today, you must always zero your mind that even if you have never applied any form of accounting standard in your life, you have applied IS1. Once you know the definition of many of these things, you know what? IS1. Because IS1 is the one that defines all these things. It's the one that defines what the financial statement is. And so, the logic behind all of these things is what we need to look at. I started from the fact that Once there is no event, there is no reporting. Once there is no transaction, there is no bookkeeping, right? And now there is transactions, and that is why we are here. There are so many transactions flying around. Idris has come up now that he wants to invest in extended reality, business of the future. He has the money, but he doesn't have the knowledge. He has met with what's it called, Damilola and Tori, to help him to set up the business so that he can get what profit at the end of the day. The process of him extending funds, sending money to Damilola and Tori is called something. What is it called? A transaction. Transaction. Or you call it what? An event. So what? Before we get to financial statement or financial reporting, a combination or lot of combinations of events must have happened that we need to report. I'll be very brief. So let's move on. On this particular slide that we are all seeing, right? This is where I'll be very brief with this as well. This is where we have what IAS1 is talking about in terms of summary of what IAS1 is talking about. What I feel like are very, very important as per IAS1. IAS1 has been established by ISB, right? For us to have a guideline on how to prepare a financial statement. Why? These are the reasons. For decision making, just like Damilola has said. For comparison purpose, just like Toib has said. And for accountability, just like Idris has mentioned. Imagine that as Idris wants to invest in that business of extended reality, and then Idris comes to Iwelabi and says, Iwelabi, I have this idea. Okay, it's not even extended reality now. I want to open a super store in Lekki. I want to have a super store in Lekki. So I'm looking at this. I thought of this, and I feel like this is not something I can manage by myself. So I want to invest in a business that is already running. I want to do what? I want to invest in a business that is what? That is already running. A business that is running, that is existing. And then Idris came to Iwelabi and said, Iwelabi, I want to invest in your business. What can you show me as a form of how the business is doing so far? And then Iwelabi did not have anything called financial report. Iwelabi just started. Last year we made 2 million naira in profits. We also spent 50% of it as cost of sales. We spent 20% of it in marketing. We spent 10% of it in salaries. And then he listed everything with mouth. No form of any form of documentation. Nothing. He just take everything with mouth. And you're like, okay, nice, well done. And then you left. You meet with Toib or Sadiq this time around. You met with Sadiq and you asked Sadiq, I know that you have a superstore in Magudu and it's moving very, very fast. I'm considering investing in superstore. Can you tell me how well your business has been faring before now? And Sadiq too started with mouth, no form of report, nothing, with mouth. And sales, we generated a sales of 5 billion naira in 2021. We did this, 15% of it went to commission, 20% of it to cost of goods, 30% of it to distribution. At the end of the day, we have a net profit of about 10%. And that is it. And then the next thing, you now finally go to Sheon. When you get to Sheon just brought a book out detailing everything that. So in 2021, you saw a book, a line that is showing that in 2021, we received our sales is like 5 million naira. So let's start. Started the class. So we're doing a lot of hypotheses for us to get the gist home. So we've gone to Sadiq, we've gone to Iwelabi, let me use here. Iwelabi, Sadiq, and then Sheon. Right? We've gone to Iwelabi, Sadiq, and Sheon. Then the next thing is that Iwelabi said his own sales in 2021. We are talking about 2021 now. His own sales is 5 million. Right? And then Sadiq said his own sales is, let's just use 5,000. Sadiq said his own sales is 100,000, and then Shehu comes. Shehu says his own sales is 25,000. And all of these companies are of the same size that you want to invest in. You are considering investing in them. And then this one say cost of sales. Cost say 20% of sales. This one say 40% of sales. And this one says 15% of sales. All of these companies are what you are considering for investment, to invest in. And you're looking at them, and the only person that has a form of book, Shehu is the only one that has something that we can call a book. Why the rest just told you all of this thing by mouth, right? You know what that means? That means that before you can even say you want to invest, there is no way you can compare all these companies because they are of the same size, but they are doing what? They are reporting different figures that are not even comparable, and this is one of the reasons why we have the IAS there and IFRS to guide how we do all of these things, so that they can be comparable, so that they can aid decision making of investors, of business owners, and then for accountability purpose. You know what's funny is that this 100,000 naira that Sadiq actually recognized as 100,000 naira, so this could have actually considered any form of income that comes into his bank account as sales, and then a money that somebody borrowed in 5,000, 50,000 naira, he has added it to sales because it's an income to him. He has added it to sales, and then services that people have not even enjoyed, 20,000 naira, he has added the guy to sales. Imagine, at the end of the day, what does that mean? Tells us at the end of the day, what Sadiq is actually supposed to be reporting as sales is meant to be 30,000 naira. However, he has quoted 100,000 naira. Even from this 30,000 naira, we can even say that some of them are actually, some of the sales, they've experienced returns of goods, but they didn't know how to treat it. They didn't capture it. Imagine. So, these ones that you see here tells us that there is a need for IFRS 15 so that the sales can be well recognized. There is a need for IAS 2 so that inventory can be well captured. And that is the reason why we have what? The IAS there to guide how we prepare this financial statement. So we started anyway, but then I'll still be using the word we start. But we keep starting. So we move on with bookkeeping. We start with bookkeeping and then we move to financial reporting. We'll be linking them so that it makes sense to everybody on this call, right? If you have any question, contribution, feel free to send it to the chat box so that Shehu can stop me at any point in time. I'm not able to see the chat box now, so Shehu can be the one looking after that and then first stop me at any point in time. You know, IS1 says something that, guy, see, you see now that Idris is confused. He's not able to invest the money that he has with him. So what should happen? Let's have structure at which all of this thing is being done. Let's have a guideline that everybody must follow for this thing to be done. And that's why part of the structure is that let's have something called financial statement. Inside this financial statement, we have component of a financial statement. There are 5. We have the statement of financial position, also known as balance sheet, statement of comprehensive income statement, statement of cash statement or cash flow, and then statement of change and equity. And then there is one last thing. Who can tell us one last thing that is not on this particular thing? One last thing that makes up the component of a financial statement.
Notes of account.
Yeah, you said?
Notes of account.
Notes to the account. Thank you very much. Please, who is that? Always endeavor to mention your name before you go ahead. Please,
okay, that? Sorry. My name is Christiana Michelle.
Okay, Christian. Thank you very much, Christian. Notes to the account. You now see what? I mentioned something. Who can remember? I said that the bedrock of any form of financial reporting and bookkeeping is what? Who can remember?
You said events.
Transaction. This is Christiana
Transaction.
Michelle.
Or you call it
Transaction or event.
Thank you. That's the bedrock. Imagine that IS1 or ISB or the people that are setting up this standard, they just feel like, okay, and you know what? It's giving you the component of the financial statement. Go and do it anyhow you feel like. And then the process of Idris giving money to what's it called? Money to Damilola and Koib. How do we define it? Do we just say that's the balance sheet? Or do we just call that on an income statement? No. And that is why IAS1 or IASB further moved to say that, guys, aside from the fact that we have a component of the financial statement that includes 5 things, we also have something that are called elements of a financial statement or items within a financial statement. And this is where everybody must pay attention. This is where we start. Right? How do I mean? What makes up a financial statement boils down to 2 things. How we receive money and how we spend money. Again, what makes up everything in the financial statement? How we define things within the financial statement has to do with what? How we receive money and how we spend money. Once you can kill that part, how money is moving. Once you can kill that part, trust me, you are on your way to becoming an expert in financial reporting. Once you can kill that part, you are on your way. How did this, in terms of money, comes into us, and how did this happen in terms of money leaving our pockets? And that's why IAS1 says that, guys, there are something called element of a financial statement, and these things are 5. Assets, expenses, liability, income, and equity. IAS1 go ahead and define these things. Once you know what an asset is, once you know what an expense is, liability, income, and equity, once you know what all of these things are. So this is it, right? And this is where we go back to where we started from. IAS1 has defined what an asset is. Asset is what we own, and then can last for a longer period of time. Expenses, operational activities that we engage in, that we spend in, that doesn't last for a while. One-off, can say they are one-off one way or the other. When I say one-off, more like something that is repetitive and stuff like that, right? Liability is what we owe to people. Income is what we receive. And then equity is money that is used to set up the business, that the primary investment in the business, right? So IS1 has helped us to say that, guy, I understand that you all know now that the bedrock of any financial statement is transaction or event. Now, let me now tell you something. You see all these events that you are talking about, there is a definition for them. And your job now is to know what the definitions are so that you can be able to prepare a financial statement. Now, you know what the definitions are. The definitions are assets, expense, income, liability, and equity, right? You already know that those are the things that they are, right? Now, your job at any point in time as an accountant, as a financial reporter, is to always be able to define an event, right? To suit that definition given by what? IS1. Do we understand? Who is following me? Who is with me?
I'm with you, sir.
No, with you, sir.
Thank you very much.
I'm with you, sir.
Same here. We're with you.
That is it, right? You see, I said something. The bedrock of any transaction, any form of preparing a financial statement is what? Transaction. Or you call it what? An event. And this event will always involve some sort of exchange of money. Whether immediate or future exchange. Whether what? Immediate or future exchange. And this takes us to the Akura concept. Akura concept of accounting. Right? We are not going there so that we can move fast. Really. Now, your job as an accountant or as a bookkeeper, so this is where everybody must pay attention. Your job as an accountant or as a bookkeeper is to be able to define any transaction or event that is happening, that has happened, or that is yet to happen according to IS1. I repeat, your job as an accountant, as a financial reporter, or as a bookkeeper is to be able to define a transaction or an event in line with what? IS1. Whether the event is an asset, whether the event is an expense, whether the event is a liability, income, or equity. Am I making sense? Yes. So let's move on. Let's go back a little bit. We say something that Idris wants to invest in artificial intelligence. He has $10 billion, but he doesn't have the knowledge of running a business, and he doesn't even have the technical know-how of how artificial intelligence works. What does he do? He now went to meet with who? With Tohib and Damilola to say that Tohib and Damilola, Tohib, I know that you are an expert in operational activities. Damilola, I know that you are an expert in artificial intelligence. You know what? I have money. A whole lot. I want to invest in artificial intelligence. You know, and I'm looking forward to start the investment in May 2022. I have $10 billion. It's available. Now, can you people help me to use this money to generate more money? Right? And then they said, yes, we can. Yes, we can. Both of them together say, yes, we can. Yes, we can. You people should be looking at it too. You see that process of Idris meeting with Damilola and Tohib to discuss an event is already happening. So you as an accountant, that's Sadiq now. Sadiq as an accountant, your job is to be following how that event is happening, so that you can be able to do what? You can be able to define what that event is going to lead to at the end of the day. Are we together? So now, Sadiq, are you here? I'll be working with Sadiq because he's the accountant. Is Sadiq
Oh, yes.
on the call?
Yes,
Okay, so as much as possible, you are the accountant, and then Damilola is here. What's it called? Tohib is also here, and Idris is also here. So now, Idris has gone to meet Damilola and Tohib. So now you are one side, you are watching them, how everything is unfolding. You are watching them. Your job is to watch them. So now, you see what has happened now. Damilola said, I have the cash now, $10 billion. Then he just bring out his phone, transfer $10 billion to Tohib and what's it called? Tohib and Damilola's account. $10 million. He has transferred the money. In that place, what has happened? What has happened? Can you tell us what has happened in that particular instance? Define that situation. Define it according to IAS 1. What has happened? Damilola has taken $10 billion and sent it to Idris has taken $10 billion and sent it to Damilola and Tohib that he wants to use it to invest. According to IAS 1, what will you call that occurrence? Let's define it.
That should be equity.
God bless you. Who is that? Tell us your name before you go.
Okay, I am Kesina.
You say what? We can't hear you.
Kesina Adams.
Okay. Oga Adams. Let's call you Oga Adams for the sake of this conversation.
Yes.
So now, Oga Adams has been able to recognize something. That event that has happened has captured equity. God bless you. Because of what? IS1 has defined that any money that is used to start a business or to further run a business, right? That is not an asset or a form of liability is what? Equity. I love you. I love what you have said. So Oga Adams has mentioned equity. Sadiq, are you still here?
Yes, sir.
Okay, now, Oga Adams has mentioned equity. Is equity the only thing that got affected in that transaction that happened or in that event?
No, of course not.
Tell us one more.
The bank or cash account.
God bless you. The bank, I was so explicit. Don't give us all. I was so explicit. The bank has been affected. That means that you have already defined the scenario. You have defined the event. You have successfully defined the event. Don't let us even use the word equity now. Let's change it to capital for easy understanding for bookkeepers. Let's change it to capital. Oh, now it is capital now. We'll probably be moving faster than this now because I actually have to round up as soon as probably 5:30, 5:45 max. So we'll be moving faster now. So let's, as much as possible, if you are here and you want us to move fast with me, let's be responsive, like timely response. Yeah, so now, you see now that capital and bank is here, $10 billion. $10 billion, both of them, $10 billion, right? Now, you know what that means? We have been able to divine that scenario. I will also mention something. Those things that I'm mentioning that are like keynotes, please let us be jotting them somewhere. I also mention something again. In every event or transaction, there must always be two aspects of them. At least two aspects of every event or transaction, right? There must always be at least two aspects of every event or transaction. So there can't be just one transaction, right? So now, what we do is, we've been able to define. Let's now go back here. Let's go back here. What we need to do is to define. We define this transaction. And we say, guys, see, there are at least what? Two events or two occurrences to every transaction. And this is the reason why they say something that for every debit entry, there must be a corresponding credit entry and vice versa. I always say something. Before you put that transaction, before you record that transaction, before you post that journal, always ensure that you understand the transaction, you understand the event. Now, I love the fact that Oga Adams and Sodiq were able to understand that transaction. And what they did was to define the transaction. They told us that bank has been affected and capital has been affected. According to IAS1, IAS1 has defined what sort of item is bank and capital, and says that bank is what? An asset. Capital is what? An equity. And so because of that, that will lead us to our first step in posting. Who can post this transaction aside from Oga Adams and Sodiq? So what they've been able to do, or the scenario is that Idris has transferred $10 billion to Damilola and Toyin to start a business in artificial intelligence. He has transferred the money. And then Oga Adams has recognized that capital is involved and bank is involved. Now it is for us to post it. Before you post, you need to identify something. Before you post, you need to understand whether is bank an asset, is bank a liability, an expense, an income, or an equity. You define it. So before you post, you need to define the transaction. So we've been able to define the transaction and say bank is an asset, and then capital is an equity, right? So what that means is that we've recognized bank, we've recognized equity. Now we need to now go to this particular side of the game. We say something that this thing is something that every accountant must know. Every one of us, we must know this thing. And how do I mean? When an asset is increasing, you debit, same as expense. When an asset is increasing, that is, you are adding more asset to your asset. You do what? You debit. And we say something. When an asset is decreasing, you credit. Same thing with expense. So once you are analyzing a transaction or an event, you've discovered that we've spent money, alright, or we want to start a business, and then we've transferred money to the person who is meant to help us to set up that business. You need to define it. The process of the person who wants to set up a business for us, to set up that business and receiving that money from us, what will happen? The asset will increase and the liability will also increase. Not liability at this extent, but what? The equity. The equity will also increase. So who wants to post the transaction for us? Who is supposed to?
Yes,
Okay.
okay. Hello. Yeah, okay, Damilola. So I will debit bank, Damilola and Toyi's bank account will be debited with the amount received, while the equity account will be credited with the amount they will transfer to Damilola and Toyi's account.
That's it. Bank, debit.
Excuse me, sorry to cut you short. There are some questions regarding how bank is an asset. Can you quickly address that?
Please. Please,
So people are asking,
okay, please go ahead. Ask. What is the specific question? I like getting specific questions.
the question is how is bank an asset?
Okay, how is bank an asset? This is an asset because whatever that is inside the bank in terms of cash, we own it. And it is presumed that this thing will last us for a particular period of time. We own whatever is inside the bank. And is able to bring future inflow, future value. So for us to be able to even define it, let's be serious here. Let's go to IAS 16. Who remembers what IAS 16 is PPE? So that will not fly. Okay, let me just use normal general idea of why bank is an asset. So bank is an asset simply because we own it and we can control whatever is inside it. I think that suffices. Bank is an asset because we own the money or the inflow that is inside it, and we can also control it, right? And it is a current asset because of what? We can always remove that money. It is accessible. I hope that answers our question. If anybody has anything you want to add, please feel free. Tell us your name and ask something. Feel free. Take free work. I want to take us to IAS 16, but it's not IAS
Okay,
16.
quick one. I just wanted to add to what Olabi just said now about banks. So for the people that are not like accounting conversant, there are some words that we use that may not like mean the same thing like in the literary terms. Because if they say bank, some people might probably be thinking Zenith Bank, GTB Bank.
Oh, sorry.
So what we refer when we're saying bank is actually like when you have cash in bank. So we just write bank on the financial statement. You remember your cash is an asset to you, of course, right? So I think that for that explains.
Thank you very much. Thank you very much, Sadiq. Which is also the same thing with what I said, that you own whatever that is in the bank in terms of money. So that's why we use bank, because this is more like saying cash in bank. So that settles that. Yeah. So thanks to Damilola who posted this transaction. So let's move on. We are moving a little bit fast. Like I said, so why are we debiting bank? Why are we crediting equity? Because of what? Our asset is increasing. Bank is increasing. Bank is an asset. It is increasing. And our equity too is what? Increasing. Come here. When asset is increasing, what do? You debit. When equity is increasing, what do? You debit. And also remember, this is another trick that I always use. When you see a transaction, first define the transaction. What is the meaning? What is the meaning of this transaction? What are the affected items in terms of financial statement elements or financial statement items? What are the affected items? You've seen that this thing has affected assets, it has affected liability. Then the next thing you need to do, once you recognize the affected item, just be able to define which one is the debit. What are you going to debit? Once you know what to debit, you can always credit the second leg, because they say what? For every debit entry, there must be a corresponding credit entry and vice versa. So, in this case now, say that we don't even know whether to credit or debit this thing. So far, we've already debited bank. The next thing is to credit the next one. At any point in time, our account must always balance. That is, whatever that is in the debit side must be in the credit side, unless in terms of income statement, where we want to recognize what? Profits. Are we following? Let's move a little bit faster. I believe almost every one of us must have jotted this particular site down. Captured it, so we move on. I said something. Before you post anything into the system, as soon as you have been employed to be an accountant of any organization, your first duty, once you resume to your office, is to do what? Ask a lot of questions in order to gain business understanding. If you don't understand what they are doing there, what are you now accounting for? You don't understand what they are doing in the company you are working, and you're saying you are the accountant. What kind of accountant are you? So as much as possible, I say here, ask a lot of questions to gain an understanding of the business. Ask questions on business streams of income. We are still going there, and which is where we are going to obviously end what we are talking about here. Ask questions on business streams of income. Your duty as an accountant, just like I have said, that fundamentals or foundation of financial reporting. Aside from the bedrock, which is transaction, the next thing to consider is the money we are receiving and the money we are spending. That's the next thing. Inflow and outflow. Accounting is all about inflow and outflow. Though when you get to a level of business partnering, it goes beyond inflow and outflow. So you being able to analyze that inflow and outflow for us to be able to make meaningful decisions. Right? Inflow and outflow means that, see, once you accept a job as an accountant in any organization, your job, just try to understand what the revenue streams are. Just try to understand what the income streams are. Just try to understand what their income streams are. Right? Just, that's your job. I'll give us an example. Let's say you gain a job, you got a job or an opportunity to be an accountant of a firm which is into extended reality. Let me just use extended reality. Let me use something that has cost. Let's use bakery. For example, right? You are an accountant of a bakery. You are just resuming. Your first job when you enter is to understand everything that makes up their income. So the kind of questions you want to be asking, what are their revenue streams? You probably might not be asking them what are their revenue streams, but asking them what are their product line. Okay, in terms of product line, is it only bread that we are selling? Or are we selling donuts as well? The bread that we are selling, are there different types? Is there up? Is there down? Right? Is there higher level of bread that we are selling or lower level? Then the next thing, you want to ask question on product or service offering to understand cost of sales. You need to understand you are in a bakery. What are the cost of sales? What are the things that makes up that bread before they produce it? Is it flour? Is it butter? Is it sugar? Do we use water? And every other thing that we use. You need to gain an understanding. What is the quantity? How long do we save them? For IAS2 inventory purposes. Then ask questions to understand key transactions. On creating the chart of accounts. This is what the chart of account looks like. This guy. You have the subgroup, you have the mapping, and then you have what kind of balance does it have. So I take us back. I said ask a lot of questions in order to be able to gain business understanding. And when you ask questions, it helps you to be able to define what a transaction or an event is. Right? So the next thing, ask questions on business operations to identify area of high risk. You're an accountant. At the same time, if you are a professional accountant, you know that it is also your responsibility to be able to safeguard the asset of the organization, to be able to account for how money is being spent. These days, many of these startups, they don't have internal auditor. We that we are accountants, this be the one that will double as auditor, internal auditor. So as much as possible, you have to be able to do that. Because what's the essence of you being an accountant when money is being transferred out of the business and you don't know what the money is used for? You're not worthy of being the accountant of that organization. Right? We move on. So now this is where we have the practical. We'll do a lot of things. So I think we are now in the practical session. Before we go to the practical session, we'll likely be using not less than 15-20 minutes for this particular part because my slide is almost done. So this is the practical session. I would like us to spend this time judiciously because I'm also at somewhere where I need to provide financial services and stuff to them. So now we are in the practical session. Before we move to the practical session, any questions at this junction? Any question? Any question? Let's ask questions. We are just getting to practical.
No, hello.
Let's ask questions.
Hello.
Please tell us your name and go ahead.
My name is Mr. Ibikune.
Mr. Abikule, glad to have you. Please go
Yes,
ahead.
sir. I went for an interview somewhere,
Please go ahead.
and they gave a question to me. They told me about their income stream, that
Okay.
they used to have service agreement with some companies.
Mm-hmm.
It's an ICT company, so they used to have
Okay.
service agreement with some companies. And
Okay.
at the beginning of the contract, maybe the
Mm-hmm.
contract of the year, at the
Mm-hmm.
beginning they will pay them the money. So
Okay.
they now ask me that how can I separate sales from income in that sense? That will I just record it directly as sales, or what will I do? That was the
Okay.
question they told me.
Okay.
So
Is that
I
all?
just told, yeah, that's all.
Go ahead. Go ahead. You are saying something. Please, sorry that I cut you short. Go ahead.
Yeah, I just told them. I said they will recognize the income directly. That
Mm-hmm.
since they have not fulfilled, the obligation, so they
Mm-hmm.
can't just recognize the income like that. So
Mm-hmm.
I just wanted to, buttress on how to
No,
recognize
see,
such income.
let me tell you, assuming I'm the one in that kind of, that's a very good scenario for you to brag, for you to shine. Just say according to IFRS 15. According to IFRS, so IFRS. The simple question that they ask you, I'm a fellow Jew, sorry that I just spoke to you back. We will ensure that we elaborate on it so that they will say, this is an accountant. And yeah, this is it. I love what they just asked you. So what they just asked you is that, if I understand you correctly, the company is into ICT. They used to go into a contract with people and as such to provide a service, and those people used to pay ahead before those services are being provided. This will be governed, or this will be treated according to IFRS 15. Now let's use your scenario to do IFRS 15. Thank you for bringing in that scenario. So we'll use this scenario for our IFRS 15. Oh yeah, so do you know much about the company so that I can ask questions?
I know a little.
Okay, so let me ask you. Okay, the company, what kind of services do they render to people?
Yes, like PZ now, they used to repair their computer. So anytime the computer, have problems, they will, repair it for them.
Wow. So how does it work? Is it that PZ will give them a lump sum of money at the end of at the beginning of the year and say anytime that our computer is faulty, we'll call you XYZ Limited. Come and fix our computer and you won't get paid. That's it. That's the agreement.
Yes, that's the agreement. So they will pay them. They have a particular amount, for each month that, or just maintaining all, your system apart from consumables. Just,
So
rendering the service
is
the
monthly.
amount per month. So they will pay them for 12 months ahead.
So you can. So this is it. Let's just use IFRS 5 step model. Who can remind me of IFRS 5 step model? Oh yeah. Let's talk.
My start the first step model.
Yes.
That's a non-correct answer that was say, right?
Sorry, IFRS 15 5-step model. IFRS 15 5-step model.
Okay, IFRS 15. You have to determine the performance obligation in that situation. I think that's the first thing to do for that is case that is just mentioned.
That's the first thing to do.
I'm not really sure. I'm just.
We have somebody that is sure should save us the time. IFRS 15 5-step.
Okay, my name is Ibrahim.
Ibrahim, please go ahead.
Okay, identification of the contract with customer.
Yes.
2, identification of performance obligation.
Yes.
3, the determination of transaction price.
God bless you.
4, allocation of the transaction price to the performance obligation. Then number 5, recognition of revenue as soon as the performance obligation.
God bless you, Ibrahim. Thank you very much. So this is it. Identify the contract with the customer. So we've identified the contract. So let's play with figure. let's say at the beginning of 2021, Ewelabi limited 5 million naira to come and render service for this year. Let's identify the contract. The contract is between who and who? Ewelabi, right? And Easy. Then the next thing, performance obligation. What is the performance obligation? Who can tell us? Somebody should work with me. I have limited time now. I'm already being told that I have limited time. Who can work with me? Performance obligation. What is the performance obligation?
Provision of ICT services.
Okay. Monthly provision of ICT services / repair of computers. Then the next thing, that's performance obligation. Determine the transaction price. It's also called determine the standalone price. So what is the transaction price? That's the next thing you will ask them. Or Oga Adams, what is the transaction price or standalone price? How much does it cost to repair one computer? How many computers are we likely going to repair in a month? Those are the questions you ask them. How many computers are we likely to repair in a month? Because you can't just determine the transaction price and just lock up. You need to, as much as possible, okay, let's even determine the transaction price and lock up. Determine the transaction price. The transaction price is 5 million in this case. Oh yeah, let's allocate the transaction price. How do we allocate the transaction price if we don't know the standalone price? So we need to know the standalone price. How often do we go and repair the system? How much are we going to charge to repair a single system? Right? So let's just do some assumptions and move on. No, I don't agree with assumptions. I love asking questions. So Mr. Adams, give us numbers. Let's work with your numbers. Are you with us? Mr. Adam is not with us. So I will just say allocation of transaction price is that we do 500k on a monthly basis or 200k per month for any kind of repair that we are paying. Our base price is 200k. So the next thing, when your performance obligation is fulfilled, you recognize revenue. So I'm almost let's just finish off. I'm rounding up. So the next thing is we've received 5 million naira. Let's post. Who is going to post? Who wants to post? Who is posting? Tell us your name and volunteer to post. Let's move on. I'm rounding up.
Okay, this it
I can't hear anybody. What's your name? Tell us your name and let's go. Or should I post and move on? I don't have much time, so I'll just go ahead and finish. I'll round up. I don't have much time. So yeah, I just move on. So the first thing we do is we've identified we've done everything according to IFRS 15. We've identified the contract, performance obligation, determine the transaction price, allocate it, and then performance obligation is not yet fulfilled as at January. At the end of January, what will we have? When we are receiving the money. So this is the point. Whenever you're in an interview, and you're being interviewed for stuff like this, go further to let them understand that you understand this thing. Explain all of these things and then go to the extent of even posting for them on that interview. Give them scenarios. So assuming you pay 5 million naira at the beginning of the period, you debit bank 5 million naira. We credit what? Revenue or sales, or you call it income or sales. We credit that 5 million naira. That's the first step. At the end of January, we know that this 5 million naira is for a period of 12 months. So at the end of January, what we will do is to do what? We have debited bank in the first place. At the end of January, that means we must have fulfilled a single performance obligation for January. We've offered the service for January. So what do? Now, when we are reporting at the end of January, we do what? We do debit, sorry, not debit. We've already debit this guy. We do revenue, credit guy, this guy divided by 12. Revenue. And the next thing, contract liability. This guy minus this guy. Then we know that the bank will still remain the bank. 5 million. This guy plus this guy. And that's it. At the end of the period, our book must always what? Balance. And that's it. So the next thing for us to do, I'm moving faster now because by 5 I'm done here. Max, I'm done. So
Hi,
the next thing
I have a
is
question.
guys.
My name is Cynthia. Okay, what about the situation where since we already know that the monthly part is 200,000, why can we just say you debit bank of 5 million naira because money came into our bank and our asset is increasing? Then
Yes.
we credit sales or income of 200,000 naira for that particular month. I would defer the balance.
Yes.
I would defer the balance.
Yeah, so it depends on the period that you are reporting. That is the one that will speak to that. It is the period. So if this thing is happening at the 1st of January, when you have not even offered any service, and you are using a computer, let's say you are using a Zoom.
Hello, I'm okay.
Accounting system, but it applies to, and at the time we are reporting is what will determine how we leave the posting. The time we are reporting will determine how we leave the posting.
Hello, sir.
Yeah, please go ahead.
Hello.
Yeah, go ahead.
Mr. Abikule is talking now.
Please go ahead.
Actually, the way I answered the question that day, I told them that the whole amount of the money is going to deferred income.
Good.
Deferred income.
Good.
And that
Good. That's
they
very good.
will debit bank and credit deferred income. So
Yes.
I now told them that it depends on their financial year end. So they gave me a scenario of December, maybe their financial year end. So I said the 6 months that they have worked for, that they can actually recognize that 6 months by
Yes.
debiting their deferred income and then now
Yes.
crediting sales. But later when I read on the internet, I saw that we can do amortization every month.
Yeah, so
Amortization
that's
every month.
correct. That's why I
At
said
the end of
something.
each month.
Right. That's why I said something that
At
it
the
depends
end
on
of
the period at which you are reporting. That will determine
yes,
how you amortize it.
yes. That's it.
So that's it. Thank you very much, Mr. Ibikule. Thanks a lot.
Yes,
Yeah, so
yes.
that catches that. So let's move on pretty fast. Yeah, I believe almost everybody on this call understand IFRS 15 now, as per what we've done. If you have any question in respect to IFRS 15, let's ask. So this is bookkeeping. This is journal. We have started doing our journal. So it's meant to come and flow to our what? Our trial balance. This is a typical trial balance. It's meant to flow to trial balance. For it to flow to trial balance, that means you need to have a ledger. Let's just assume that these are the ledger balances. All these things that we have here are the ledger balances. So what we will just do at the end of the period is revenue. Come to the TV. Credit revenue with the amount that we have earned, which is this guy, right? Then the amount that we the unearned income part. We don't have it yet, so let's create it. Contract liability. Contract liability. You guys have
Mr.
Yeah.
Mr. Kudi, sorry, is contract liability the same thing as deferred income as you just
God
explained
bless
by?
you. That's the term as per IFRS 15.
Oh, contract liability is the same thing as deferred income.
Yes, it's the same thing as deferred revenue on end revenue. It's just terminology.
Oh.
Yes, please. That's
So
the
what about the companies that they now put their they now credit sundry income? For instance, now in where I work, what they always do is that we have main streams of income, which is we produce cocoa, liquor, cocoa butter, and cake. That is our main ordinary sales. But like byproduct, when we sell shell, maybe when we sell the shell cocoa or we sell jute bag of cocoa, those ones are not our ordinary, our regular sales. They're just like a byproduct, or we sell oil extracted from cocoa. In that case, is it still going to be like this?
No. That one is not coming here. That one is not coming here because it's outside the ordinary sales of business. Revenue is what you generate from your ordinary course of business. But that one is an other income.
Okay, that's what they mean by sundry income.
Is that?
That's what they mean by sundry income.
Yes, that's just terminology.
Oh.
It's other income. It's just terminology.
Okay, continue. Thank you.
Yeah. Anybody with any other question, IFRS 15, before we leave that guy? So the next thing to do is to debit UBA 5 million. You see that it has balanced. Our trial balance has balanced. Then the next thing, we need to come to our financial statements. That means that we have received 5 million naira revenue, PZ, money from PZ, Then we debit this guy, money from PZ, we debit this guy, and say this guy. Though it is from bank statement, it ought to come to this guy, but I just did it the other way. I'm sorry. So we credit bank, Charlie. This is bank statement, so we credit it. So bank statement. It's in bank statement, then the next thing. Then let's not even use bank statements. If you come past bank statement, let's just come to how it affects this place. So how it affects this place is to come and pick this guy. See where is the revenue? This is our revenue. So this is the last part of where the revenue is supposed to be in the extended trial balance stuff. So this is the revenue. Let's just take the revenue. Then any expense, not yet. Then the next thing, we have assets. Yes, we have cash and cash equivalents. CB.
Mr. Kuri, sorry, I want to ask another question. This revenue that you recognize, it seems you recognize for a month.
Yes, because we are reporting for a month.
Oh, okay.
We are reporting for a month. That's why we deferred the rest. See, this is contract liability here. We deferred the rest. This is revenue here. So you see that our trial balance balances. So that's that. We don't have much time. So I believe everybody understands that IFRS 15 one way or the other here. So we move on. So so this is how you move from bookkeeping to financial reporting. Just understand the event. Once you understand the event that has happened, define it according to IAS 1. Once you define it, where does it fall to? What is the IFRS requirement? Is this an item of inventory? Yes. How do I treat inventory according to IAS 2? You treat it and move on. But the first thing, as an accountant, ensure you get correct information. Before you post anything into the system, what do I say? You ensure that you understand the transaction. This is the typical transactions that I use. I've used it severally. So who wants to post this guy? Anybody that has been in any of my class before should not attend this. So let's other people learn. Who wants to post? You will have purchased a MacBook from company A, 1 million. What are you posting? Let's be fast. I don't have much time again. Just volunteer. Let's post. Let's move on.
Okay, well done, brother.
Go ahead, Pamela.
Does he pay the money by cash or is it on credit?
Oh, the money is it by cash or on credit? Yeah,
Or is
actually
it on credit?
is on credit.
It's on credit. If it's on credit, then you will debit the PPE account in respect of the MacBook that you bought
How much?
computer
How much?
with 1 million,
Uh-huh.
1 million in respect of the MacBook computer
Okay.
equipment.
Uh-huh.
I will credit the payables account, the creditors account.
Is that all?
Yes, sir.
Who disagree with this posting? Anybody disagree? You have been in my class before. Don't let us stop. Let's just observe.
Okay, I disagree. The nature of the transaction
I
is not clear
disagree.
enough. So we don't know if that MacBook is actually an inventory or it's
Exactly.
an asset. Yeah.
Exactly.
Okay? You don't know whether it is an inventory or an asset. So how do you know? You post the transaction. Tell us your name. Post the
So
transaction.
this is the Brian. So we will need clarification there. So
Exactly.
the ordinary course of business of this company, are they into sales of MacBook computers?
Yes, that's correct. They are into sales of MacBook computers.
So that
Right.
makes it an inventory then. That makes it an inventory.
Okay, inventory. Right. Is that all?
Okay, then credit payables.
Okay. Who
This is
still
a credit
disagrees?
transaction.
Who still disagrees? Who still disagrees? Are we good now? Can I have yes from people that we are good now?
Hello, sir.
Please go ahead.
Hello, Mr. Adipole is talking.
Please go ahead.
All right. When such a case is inventory,
Yes.
now I regard it as purchases. Do we
Okay.
post directly to inventory or purchases?
God bless you. We are meant to post to purchases, not inventory. So do you say you want to change the posting? Should I
Yes.
post your own? Okay, purchases. Makes sense. You
Yes.
see, this is how we learn. This is how we learn. We speak outside, we learn, we gain more. So is that all?
Hello, good evening. I totally disagree with purchases anyway. I believe that it's supposed to be, we have to debit, since it's a regular sales that we always is a stock. So we have to debit inventory. Then
Okay.
we debit inventory. Then
Okay. Who is talking, please?
Okay, Mr.
No.
Toyosi
Somebody
and
is saying something. Don't cut the person short, please.
Adipole is talking.
No, before
Adipole
Mr.
is talking. I said,
somebody is saying that he disagreed that we ought to do inventory.
okay.
yeah, it's me. I said debit inventory, then credit vendor.
So where
But
does the IS2 valuation for inventory comes in? You are debiting inventory. Go and be thinking about that one. So who else is
I
going?
would like to add there is nobody that
Please.
is wrong as per what account to debit or inventory or purchases. It depends on the method of inventory valuation that the company is using. The standard did not tell you that you have to specifically debit inventory. And if you look at it, when you sell inventory, do you credit inventory? No, you credit sales. There's a reason for that, right? So if you are maintaining, there's a perpetual method of maintaining inventory, and there is another one I can't remember at the moment, where you reconcile your inventory at the end of the year or where you get it back. So both methods are actually correct. You can choose, but it is going to be dependent on the policy of the business. Are you keeping a perpetual inventory or periodic inventory? That will determine where you should post. Either is fine. No one is wrong.
So if you say either is fine, how do inventory? How do I know the difference? How do I establish my cost of sales?
Okay. So for you to establish your
Cost of
cost of
sales.
sales, actually has to go beyond your normal financial reporting. You have to do some costing, because there are some things that go to your cost of sales, right? Your cost of sales is
No, it doesn't go beyond financial reporting. Sorry to
your
cut you
cost
short.
of your cost of sale is a combination of your opening stock, card purchases,
Good.
less closing stock, which is the reason why it goes beyond
No,
financial
it's still
reporting.
within financial reporting. still within
your
financial report.
valuation of stock
Exactly.
goes beyond that. So
No,
it both works.
no. So I would like to agree and also disagree at the same time when you say both works. Because if you debit your inventory, you'll be debiting with the face value of the sales. You'll be debiting your inventory with the face value of the sales. And I can tell you categorically that you didn't purchase the inventory to be sold at the cost price. And you must have recorded your inventory at the cost price. So which means that there must be some form of you having to ensure that it goes through that process of purchases, valuation to know what to take out as cost of sales at the end of the period. No, I don't want to delve into much about that. So somebody said purchases, somebody said PPE, somebody said inventory. Who is still disagreeing? Okay, let me just make it faster because I have 3 minutes to go. Faster now is that as much as possible, you need to ask a lot of questions. What of the invoice amount? What if I tell you that the invoice amount is 5 million naira and not 1 million naira? This is an incomplete statement. For those of us that are working with startup, let's always ensure that we ask questions. Let's ask leading questions to gain necessary insight into business operations. Imagine that you have posted PPE, you are in an interview and you have posted PPE, and then the interviewer is the one telling you that you will have this into sales of MacBook. Then you go back and say, that means we have to post it to inventory. And then the interviewer was like, so how do you consider the valuation of IS2? And then you say, you need to be purchases. And then the interviewer is now like, okay, now, the invoice amount is even 5 million, not 1 million. And you're like, it's not stated. Did you ask? So we need to ask a lot of questions for us to be able to gain insight into business understanding and for us to be able to understand what the event we are posting is talking about. Right? So that's it. That's just it. Let's ask questions. So we'll move on. When we ask questions and we understand the scenario, the next thing is to do what? To identify the group of accounts that we are going to post to. Is it payable, receivable, and what have you? Then we have source documents. Source documents are things that will help us to book.
Mr. Philip, you posted it.
Come back. I can't hear you.
You've not answered the question. You've not posted it. I mean, you're still waiting for
it. Has been posted. It doesn't need posting. No. Okay, let me post it with Sadiq. Sadiq, please ask questions.
Question regarding the transaction.
On this particular transaction, you will have purchased mark 1 million.
Okay, so the thing is, when you say that you've answered some questions regarding.
Ask your own question.
Okay, so the first thing is Iwelabi into what is the business of that's one. What is the business of Iwelabi? That's one. What is the document?
Iwelabi is into IT services.
Is into IT services. Okay. So, is there a source document for this transaction?
Yes, there is a source document. An invoice. Okay. We got an invoice.
So just an invoice was gotten. So that makes it a credit, right? What is the purpose of buying? You said just an invoice the only source document that you have for this transaction?
Yes.
Only an invoice. That makes it a credit transaction. Then, what is the purpose for buying it?
The purpose of buying is one of the staff members need to use it.
Okay, so that makes it a property, plant, and equipment thing, right? Okay. On the invoice, is this the amount that is stated on the invoice?
No, the actual amount is actually 2 million naira. It's a MacBook, 2 million naira. MacBook, that's the actual amount.
Okay. So then, why are we having 1 million naira being told?
Well, 1 million naira is the amount that we've paid so far.
That means there has to be a receipt for that payment.
And so this is a startup. We don't have receipts. You don't give us receipts.
Okay, so you have to go with the posting of the actual amount on the invoice for the purchase of the property, plant, and equipment. You can't just accept the explanation that because you are a startup.
Let's post this. I'm already running out of time. So let's just.
So, debit PPE, credit payable.
2 million, Che.
Yes, with 2 million.
What do you credit?
Credit payable. You are going to be crediting the account of the seller.
We paid 1 million.
You need okay, so you credit bank with 1 million paid. But before you credit bank, your accounting is you have to be objective. So you need to go and source for how that payment was paid for auditing purposes later in the future.
So what are you proposing? Sorry, I need to
Get
go
the
fast.
bank. You can get the bank statement for that. So you should see the payment from there. If it is bank or check.
Okay, thank you very much. Sorry that I'm going to have to cut you short now because I need to move faster than this. Thank you very much, Sodi. So that's it. He has asked beautiful questions, and from those questions, he has been able to ask what are the source documents behind this transaction. He asked, is it only invoice that we have? When we said yes, he said that means that it's a credit transaction. But when I said we paid, he said, okay, do you have a receipt? That means that receipt is also a source document. They say, no, we do not have receipt. What of your bank statements? So all these things are what you need to be asking your people as a good financial reporter or as a good bookkeeper. So I need to move faster than this. Invoice will tell you the real amount of the transaction, right? Bank statement will tell you the amount that is paid, right? And that's it. So identify the relevant books with wrong parties about what to debit, what to credit. We already know what to debit. So record keeping, general ledger, source documents, redemption bank, invoices, receipts. So let's say we pay in advance. We can keep a payable schedule. We can keep a payable schedule. Something like this. If we pay something for, we pay something for 12 months, maybe maintenance. 12 months, January to December 2022. How much did we pay? Duration 12. Opening balance, we paid 12 million naira. Sorry, 12 million naira. Then the next thing, addition, no addition. Sorry, no, let's do no opening balance. No opening balance, addition. That was paid during the year. So the next thing we need to do is to divide this by 12. Since it is for 12 months, we can just do this guy divided this guy. Let's log the guy divided by this guy. Let's log the guy. Then every month we have to always update this thing, and we must always post 1 million into expenses every month when we prepare. We must always recognize payment every month. So that's that. Then another thing that I would like to show us, which is also like a source document where we keep data, is asset movement schedule. This is what an asset movement schedule looks like, where we have the asset classes, motor vehicle, plant and machinery, furniture and fittings, whatever. Then the costs. What is the cost? What is the opening balance of the cost? You know, our trial balance, we must always ensure that we recognize our assets at cost. Though some people can go ahead and do net book value, but you can still recognize at cost to always ensure you keep track of the cost of the asset. So we have this guy opening, then we have additions during the year, we have disposals, classification, and accumulated depreciation. We know that our carrying amount or net book value is, according to PPE IAS 16, cost minus what? Accumulated depreciation. Asset register, we are done. Sorry. Asset register. This is what an asset register actually looks like. One, then additional assets for asset register sake, and what have you. So I think this will be the end of it for me. Any question at this introduction? Final questions before we call it a day. Some final questions. So final question, please, before we call it a day. Is shown here. Any final question? Hello?
Yeah, I'm here.
Can't see. So any final question from anybody before we call it a day? Any feedback, additional comments?
Thank you very much for this time out. So I
Have
really
you gained
appreciate
value?
it. Yes, sir. Very well, sir.
Thank you very much, Ogama. Thank you very much for hosting. If there is no question, I think that will be all from this end. I have to attend. I think we will need to move. Okay, yeah, we can always get back later when I have time. And for those of us that probably have not been seeing my post, you can follow up on LinkedIn. My full name on LinkedIn is Balo Sadebowale, or we can just type in Wilabi on LinkedIn. You can always follow my post on LinkedIn. My next set of posts will include IS 8, IFRS 9, IS 8, IFRS 9, and the completion of IS 7 that we've been writing for a while now. If you have any question, feel free to shoot me a shot on LinkedIn, to chat me up. I'm very responsive on LinkedIn. And you can also engage on my post for question. Thank you very much, guys. I really appreciate our presence.
Thank you so much.
Thank you, sir. Thank you, Mr. Wilabi. I want to say that I'm really glad to hear your voice this evening because I've been following your post on LinkedIn. I was I commented that the way you always present your the accounting knowledge is always amazed me, and hearing your voice this evening confirm the fact that you are embodiment of knowledge. I appreciate you, sir.
Thank you very much, Damilola. Thanks a lot. I really appreciate that. Okay, Sheon, I think I'll leave the floor to you. Thank you.
All right. Thank you very much. My other colleague round up the session.
Many thanks to Mr. Kulu for this wonderful, insightful, fun-filled session that I'm sure we will gain some piece of value this evening. So subsequently, you would definitely invite Mr. Balogun again.
So I would like to take my leave now. Thank you very much, guys.
It's a pleasure. Sir. Okay, so this part of our platform, link WhatsApp group via the chat box. This particular virtual session is done on a monthly basis, so we get to see another valuable conversation with our community members and the general public. So, want to appreciate we appreciate you. God bless you. And we'll see you again next month for this particular. Thank you.